Hello and welcome to another edition of Beyond the Hype. I'm your host, Alfred Edmond Jr., Senior Vice President and Executive Editor at Large at Black Enterprise. And this episode of Beyond the Hype is brought to you by Synchrony. And that is really appropriate because my guests today are talking about an initiative that Synchrony has committed to that really speaks to one of the most critical conversations that we have here on Beyond the Hype and for Black Enterprise in general. And that is access to capital for Black-owned companies, for Black founders, as part of the larger discussion of narrowing the racial wealth gap in America. That's a big part, maybe the core part of the Black Enterprise mission. So please welcome to the show, Jeff Lamour, Senior Vice President and Head of Synchrony Ventures, and Nasir Qadree, please correct me if I mispronounce your name, who's the founder and managing partner of Zeal Capital Partners. Welcome to the show, gentlemen.
Thanks for having us. Good to be here.
So let's start at the top. Let's give. I always want our guests to give a backdrop to our audience about who they are, their orientation to this conversation, and why you are stakeholders who really can share what's going on beyond the hype of this particular topic. So why don't you start with just telling us your journey to doing what you do today? What brings you to this particular mission, this particular occupation? What makes you tick, and how did you get here? Jeff, how did you end up being Senior VP and Head of Synchrony Ventures?
Yeah, thanks, Alfred, and again, excited to be here today. And so as I think about my path, I've spent my entire career really in the financial services industry, really always focused on identifying innovative solutions that were really trying to help shape the industry. I started my career at GE Capital, a Synchrony predecessor actually, really learning the ins and outs of the finance world. Just a very foundational experience for me. And then after a stop to get my MBA, I worked on Wall Street for almost a decade, advising financial technology companies who were really bringing new solutions and products into the market. I had the opportunity to work with founders and leaders, that were successfully established at that point, but seeking that next phase of growth for their business, and whether that was, becoming a public company, or considering to acquire a company, or even being acquired themselves. And while I really enjoyed that role, after some time, I realized I wanted to get back into the business side of things, and really leverage the market knowledge that I picked up and experience a little bit more directly. So it was at that point I decided to return to my roots a little bit, and where I joined Synchrony, which had become a standalone company probably about 8 years or so at this point. And so now in my role as head of Synchrony Ventures, which is the strategic investing arm of the business, my role really involves, spotting companies that have potential to, again, in conjunction with Synchrony, just really, shape the future of the financial services industry. Ultimately, I'm out looking for opportunities to bring innovation into our organization. And as one of the largest, consumer lenders in the U.S., Synchrony is well positioned to really partner with a lot of these early stage companies. And so by investing in and then exploring, partnership opportunities with those companies that are really at the forefront of our industry, the ventures team and my role is really to help Synchrony accelerate the innovations that are coming into the organization. So it's been a really great ride. Seems as I say it now a little bit like a straight shot, but definitely was not the case kind of going through it. But really excited to kind of be in the seat that I'm in today.
And did you always have this kind of always wonder whether people kind of are led to what they end up being doing, or they kind of always had a feeling that they wanted to do it? Were there elements of this that were seeds planted in you early on before you realized what it was?
I'd say the short answer to that is definitely yes. I mean, I think, as I think back to, just people that inspired me coming up, right? Just people who were really just involved in, trying to make sure that where the businesses were going and headed was something that was, the important part to be, involved in that business, right? Really instilling in me that's kind of, to the excitement and the joy of, kind of being in your day job is really comes from, being able to really understand like where the industry is going and how you can make a big impact there. So, I think that those are a lot of the seeds that were planted from my early days to, as I think back to many of the mentors and the people that I really learned a lot from throughout my career.
Nasir, same question. You're founding and managing partner of Zeal Capital Partners. Just in a very critically important role. What led you to that path, and what drives you even today in terms of doing what you're doing?
Absolutely. Alfred, it's so great to be in this space with you, and Jeff, always great to be with you, man. For me, I reflect as we're upon the HBCU homecoming season. I'm a proud Hampton University graduate, and coming out of school, I knew it was very important for me to really lean into gaining a solid skill set, building out my social Rolodex, and building out some personal capital. And then, of course, mentorship was incredibly important early on, as it continues to be today. And started my career off at Goldman Sachs and State Street Bank, where I really honed my investment chops and my love for economics and being analytical. But aligning myself with mission-driven work was always at the forefront for me. And I felt early on that maybe I need to leave the Wall Street era and go into nonprofit. And I learned early that you don't have to go into nonprofit. Nonprofits are very important, but as you think about ways to merge your skill set, merge your values and mission alignment, but still have that economic mobility front and center, there's other options. And so coincidentally, much like Jeff, getting to ventures is not a cookie cutter approach. There's interesting things you do that introduce you to where you are today. And so for me, interesting enough, was opening up a coffee shop. And that coffee shop in New York City, Alfred, became an incubator as well. We house a lot of entrepreneurs. And in turn, a lot of those entrepreneurs are meeting with investors. And so as an owner, you walk around, you're kind of respectfully nosy, and you build some relationships with some of the investors. And those investors introduce me to the private markets, which is part of venture capital, and more specifically, impact investing and education technology, a category and issue that I care deeply about. At that time, I was sitting on several nonprofit boards. America Needs You, building educated leaders for life, Bell National, and made spent a small stint as a civic appointee in Connecticut, leading the state's digital learning and infrastructure strategy, essentially incorporating the role that education entrepreneurs play to increase student achievement and workforce employment attainment. And then my name was put in a hat to join a very small venture firm called Village Capital, where I became global head of their education investment practice, and then later their U.S. economic opportunity focus portfolio, focusing on financial technology and education workforce and healthcare as a means to turbocharge economic mobility. And I think what was very interesting in that experience is that I had a chance to lean into these underrepresented ecosystems that house incredible entrepreneurs, like in Nairobi and Bangladesh and Mexico City and Bogota, Colombia. And here in the U.S., while we sourced and got excited about companies in Boston and New York City and Silicon Valley, we cared a lot about leaning into these quote unquote flyover cities where you were able to find some amazing entrepreneurs, but recognize when you over-index your allocation and traveling dollars and even capital, you will also have a more diverse pipeline of entrepreneurs, and then you couple that with looking at incredible companies solving problems around financial wellness and inclusion and healthcare and education. And so AT&T was actually an early backer into Village Capital and approached me to join as leading their $400 million social investment fund. And in 2019, I got, got bit with the entrepreneurial bug, and going back to mentors, my confidants, it suggests that Nasir, you have a solid track record. You built a solid reputation. You're at the time you're 34 years old. Only 1% of you are black investors. Why don't you start your own investment franchise? And imposter syndrome, as a lot of entrepreneurs, whether you're a fund manager or you're an entrepreneur, as you know, Alfred. Um, but I recognize my privilege that I had an amazing group of confidants, personal advisory boards who were pushing me, and I built out and ideated a strategy that I felt was missing across the venture capital landscape, and began to ideate Zeal, and led to amazing partners like Jeff and Trish at Synchrony Financial who decided to step up and support diverse fund managers that ultimately is changing the landscape as we think about venture capital and deploying that capital into black or more broadly BIPOC entrepreneurs around the country.
I want to thank you both for explaining your journey. One of the core foundational missions of Black Enterprise is not only to showcase leaders and successful people across industries, but increasingly, and I'm older than both of you gentlemen, it used to be you asked somebody what they wanted to be when they grew up, and it would be things that you could readily point to. Yeah, I want to be a doctor, I want to be a lawyer, but we have long passed the age, both technologically and in other ways, where many of the best or most interesting career opportunities are not things that you could point to when they don't, or in our cases, many cases, they don't even exist yet, because the technology that made certain jobs available today didn't exist when you were in high school or in elementary school. So it's always, to me, very enlightening for it to say, well, when did you think you got on this path to end up doing what you do today that couldn't have been on your radar screen or your parents' radar screen when they were like, I just want you to go to school and become successful. I want you to get a good job and be successful. So it just is always very insightful to our audience, particularly people in the earlier stage of their careers. I always tell people, be prepared, because what you're actually being prepared for probably doesn't exist yet. Or in the case of going into an underrepresented sector like VC, you're preparing for territory that no one like you or very few people like you has entered yet. But that doesn't mean you shouldn't have the ambition to get there. So whenever I can showcase gentlemen like you who are there to say, yeah, this is what I did, this is how it happened. It wasn't a straight line. It wasn't even something that I could technically predict or plan for in a really practical way. I think it does just bring a lot of meat and depth to an understanding of what you do and why you do it. Listen, I tell people, I wasn't a journalist before I went off to college, and I wasn't a business journalist when I came to Black Enterprise. So, those are things that kind of happened along the way. Today, I'm such a geek for entrepreneurship, which is another reason I was so happy to get you guys on the show, because I mentor entrepreneurs. I'm one of the official mentors for Black Ambition, but even outside of that, I mentor a lot of entrepreneurs, even though in many cases I have not done what they do. I just follow entrepreneurs the way people follow athletes. I can't get enough of seeing, how did you get that idea? How did you monetize it in the whole nine? So I just think you guys are just in the catbird seat for real, just to be able to sit where you are, to even see these amazing entrepreneurs, these amazing ideas, and play a role in bringing them to fruition. Speaking of playing a role, Synchrony last year committed $15 million in venture capital funds to Black-led, Latinx-led female investing partners, again, to kind of address many of the systemic inequities that aren't new, but obviously there's a much greater focus on it in the last 2 years since the murder of George Floyd, during the pandemic, and all the other things that we are now focused on now. Many companies, including Synchrony, are really stepping up to try to not just talk about it, but to do something about it. Talk to me about this point in time, and from Synchrony's perspective, about why make this $15 million commitment to venture capital funds like Zeal, and then Nasir, I'd like you to lean into what this particular period means for funds like yours, to really try to start moving the needle in the right direction when it comes to access to capital for Black entrepreneurs. Yeah.
Yeah, and I'll jump in, and I think One, I'd say, we're obviously really excited about the initiative in terms of us being able to really take a step back and say, you hit it a little bit earlier, right? And run the stats of when you look at what's going on in the VC market today, right? Where the funds are going, we really took a step back and say, like, what's really driving the lack of dollars being invested in Black and other diverse founders, right? And there's obviously a lot of systemic considerations that you can think about, but I think the one thing that we hit on was it really boils down to who the check writers are, right? And for us, and the capital that they have in order and to really be able to extend, that to then the diverse founders who we know are out there and are really trying to make impacts in communities that are really underserved and really have very innovative types of companies in mind. And so for us, we said there is a huge opportunity for us to really play a part here, and think about not only ways for us to obviously provide capital. And so the initiative, the $15 million, was one where we said that can be a great opportunity for us to support great investors like Nasir and the other funds that we invested in, but really be able to partner with them, I think, in a much more material way. And from a Synchrony perspective, right? So being in my seat, this was an opportunity that being a Black investor myself, to say, I would really cherish the opportunity to go out there and support other investors in this same way. And the great part about this was that the conversation internally with Synchrony, it was a very easy conversation, because for Synchrony, right, at its core, diversity and inclusion has been something that's really been kind of a cultural point of focus for quite some time. As you mentioned, right, there was obviously everything kind of that was going on socially really helped illuminate that much more. But the opportunity here was one when we had discussions internally. If anything, there was a push to say in everyone's role, figure out ways that you can make a broader impact. In terms of trying to normalize some of the systemic issues that we have in our industry. And so yes, we were really excited about being able to go out there and find great investors like Nasir who are really I think have the opportunity to go out there and then themselves really invest in great founders who are really just building out really great opportunities or great businesses, I should say. And again, like I said, for us, as we were thinking about this strategy, we met many a great investor that we were really saying to ourselves, as we're looking to partner with these organizations, how do we think about not only providing the capital that is obviously very critical, but then also being able to amplify what they're doing, what they're great at doing, by really leveraging the scale that Synchrony has to offer. And so, that was a critical part of the strategy for us, was really being able to say, let's partner, let's invest, but then let's also bring the scale of Synchrony to the conversation as well.
Jeff, everything you're saying, and I'm definitely going to throw this to Nasir. One of the things that I began to appreciate when I became a business journalist, and this this kind of conversation became a regular part of my life at Black Enterprise, is this idea that if you want more, bigger, better, Black-founded, Black-owned companies, the missing link, if you will, was investors, and that you had to have more Black investors, that it couldn't be just Black entrepreneurs seeking investment. It had to be Black people, many of whom would never become entrepreneurs. I mean, you're talking about a subsection of a larger population, but a much larger percentage of the population, especially now, has the capacity to become investors, even if they never become entrepreneurs. And so this whole idea that, and this is something that kind of birthed in my mind as a young journalist, that where are the Zeals? Where are these? And of course, Black Enterprise ranked some of the rare few of them back in those days. But I'm really leaning into this idea, Nasir, that becoming a Black investor and then investing, corporations investing in Black investment vehicles is really like a force multiplier that may be a lot broader and more impactful than the traditional. Boy, we need to get more loans to
Mm-hmm.
black-owned businesses so
Mm-hmm.
they can do what they do. Not that debt and loans don't matter, not that banks don't matter, but this idea of investing, which creates not only a positive social impact, but let's face it, you invest to build wealth, and we're talking about a wealth building conversation.
Absolutely.
So talk to me about everything that Jeff has shared with us here in that context, in terms of why what
Yeah.
Synchrony is doing, what other corporations are doing or could be doing, really is to me a level above what maybe what we've traditionally thought of in terms of quote unquote supporting black founders.
Of course, Alfred, what Jeff and Trish and the Synchrony Ventures teams is doing is sending a powerful signal. We know today that 1.3% of venture capital that is managed by women and people of color, that's where we are today. And close to $70 trillion is left on alpha, is left on the table where we're not underwriting, we're not proactively sourcing and investing in women and BIPOC entrepreneurs. And so to your
And, and, I,
point,
and I should put out to our audience, 1.3% is a high. That was 2021. That's
that still
that's a peak.
remains, and that
Right.
still remains today. We've seen an emergence of black led, women led, Latino led venture funds, but we still got a long way to go. And so one of the, I think, systemic changes that we have to continue to see, and I believe, in islands of excellence. And I view Synchrony, Jeff, and Trish as a great exemplar of that, because we call this the money behind the money. If we're truly going to make systemic change into investing in more black-led venture funds, for example, we have to change who's allocating the LP capital into those venture funds. And so, those who have intentionality at the LP level, and for what it's worth, that is limited partners. Those are entities that are putting money into these venture funds, like Synchrony Financial, and in university endowments, and pension funds, and fund of funds, and family offices, and private foundations are entities that are historically have allocated capital that has allowed venture capital fund managers to execute their strategy. And so I believe that we have to continue to rethink and train or recruit diverse limited partners so that there can continue to be more intentionality in terms of more black investors having access to capital so they can invest into more BIPOC entrepreneurs. I think, and what this means for us, it allows us to execute our strategy, right? So for Zeal, we're laser focused on partnering with exceptional diverse management teams that are rethinking the building blocks of wealth, from education to employment pathways. That's our future of work and future of learning category, to financial wellness, financial inclusion. That's our financial technology category. And I'll even put a shameful plug in focusing on now health equity, which we believe these three categories is important around turbocharging economic mobility. So this idea of narrowing the wealth and skills gap through investing in tech-enabled projects across future of work, future of learning, financial technology, and soon-to-be health equity. And so for us, to execute that strategy, you need enough capital to go out and source and underwrite sizable investments, sizable allocations into these diverse entrepreneurs across the country. And on top of that, I think another critical component to the Synchrony and Zeal's partnership is that I myself am also an entrepreneur. I'm building a company, not just a fund, but you're building a lasting investment franchise. And so, much like any other entrepreneur building a company, as a fund manager, there are areas such as operational efficiencies. You want to think about talent. You want to think about recruiting and retention. You want to think about team culture. And so, Synchrony being a large corporation, you're able to tap into to Jeff's point, tap into the resources that allow you to be able to run and build a best in class investment franchise And Jeff and I have had regular cadence calls, and it's been incredibly helpful as we not only execute our strategy and invest in diverse entrepreneurs, but ensuring that we have the necessary tools operationally, administratively, post-investment value creation to support entrepreneurs to build the best-in-class investment franchise. So Zeal Capital Partners can be here for the next 50 years and beyond. When I'm probably no longer on this earth, and so legacy, right? That is succession planning. That is that's another conversation. But kind of skating when the puck may go. But you need important, just thoughtful investment partners like Synchrony to help make that possible.
I want to build on this idea of best practices. Well, I want to build on two ideas: best practices, but this other thing that I've always passionately felt, that corporations that invest in programs that build businesses automatically are having a multiplier effect, because it's not just about the wealth of the entrepreneur, it's about the economic activity in that community, it's about the jobs created, but most importantly, you can measure the success. Whether you're doing something on a small scale, like funding business pitch competition prizes to the tune of $10,000 or $20,000 to the winner, or you're doing something on a much broader scale, which is investing in other investors, investing in investment funds. You can really measure this, which businesses thrive, how many businesses thrive, are we making good investments, and really measure the return on investment in a way that a lot of other socially motivated, I'll call it, efforts by corporations may or may not have that same degree of measuring and metrics and performance. And to me, when you can see a real return on investment in seeing successful companies, successful entrepreneurs creating real jobs and real economic activity, it becomes a real, not only a motivation, but a incentive to continue to do that kind of work, and for other corporations to pick it up and do the same, because that's just good for the economy of the country and it's good for business. Tell me, when we talk about this idea of best practices, Jeff, how do you go through the process of determining which funds you will want to support? And what do you look for? Again, we know maybe because of the DEI agenda, yes, Latinx, Asian, maybe women. We know the different areas of underrepresentation, but it doesn't. There's much more to it than that, because ultimately you want to make good investments in strong companies. What are you looking for?
Yeah, I mean, Alfred, I think you hit on a very important part of the conversation that is where we started with a lot of the conversations we were having internally. Trish, who's the Chief Strategy Officer at Synchrony, along with our CEO and even at the board level, right? This is, there are certainly, initiatives where you're looking to, invest money where the returns are not necessarily kind of the first or second or third kind of outcome that you're looking for here, right? But when we thought about this strategy and thinking about the sustainability of the strategy, which is key, right? We knew that there were diverse investors today who are out there, showing a history of being able to go out and find the right companies who are able to actually scale, grow, and drive return on invested capital. And that is the first place we started in terms of when we looked towards who are we thinking about partnering with on an investment strategy perspective, right? We are looking, this is, again, finding people like Nasir. There are, some of the conversation is always, as you kind of think about, people trying to, maybe not defend, but kind of speak to where the numbers are in terms of capital allocators today, just indicating kind of the lack of a pipeline, et cetera. And I think, there's, this initiative and many others like it, right, are really proving the point that not only are there great investors out there like Nasir, like some of the others names that we invested in, they have a track record, a history of being able to show, that they can find the best and brightest, entrepreneurs from diverse backgrounds and really being able to do a great job in terms of, investing in them, supporting them through the journey. So that was step one for us, certainly, is finding the, investors who have the right background, and those that we believe long term can continue to drive.
And Nasir, the same question on the next level, if you will.
Hmm.
You can't really deliver the value as a investment funding company unless you're investing in companies that also perform. That again, that over time says, man, this was a good investment. Ultimately, it needs to be a good investment. How do once you determine the areas, the sectors that you focus on, what is your philosophy in terms of determining what entrepreneurs or startup to fund? What do you look for?
Yeah, that's such a great question, and so important as think about the importance of maintaining, being great stewards of capital, but also you want to um, stay within your domain expertise, provide good investment acumen. And so for us, it's obviously practicing what you preached, putting into executing what you preach to your limited partners, and not going outside of your strategy. So being disciplined as an investor is first and foremost. When you think about getting excited and partnering with entrepreneurs, on the one hand, you want to have a great and differentiated investment sourcing capabilities, right? Where are you going? Where are you finding these entrepreneurs, right? I alluded to in my story to coming to Zeal is that one of the themes that kept coming up for me is that I was able to get excited and learn about these overlooked ecosystems where entrepreneurs were investable and most of which were diverse entrepreneurs, and they were also building on top of local assets, right? University systems and local corporations and think tanks and accelerator programs that really got them to understand their business model and their go-to-market strategy. And so that sourcing capabilities is really important. Number two is that once you get to know the founder, making sure that founder has clear founder market fit, which means that they are the founder who can execute the strategy of taking this company to, we invest in early stage companies to the next stage of growth, right? And then for us, asking ourselves the question, are we actually the right investment partner to lean in and provide more than just capital, right? Helping with their recruiting and retention, helping with their understanding the product, the end user experience, their sales strategy, right? And then, of course, our North Star is to achieve alpha, right? The way that particularly black fund managers remain in business, if we return 10x, 100x our LP's capital back. And so, producing top decile fund returns is so important if we're going to remain in business, if we're going to continue to have more diverse investment franchises around the world, and that yields opportunity for the next generation of investors to run their own investment franchise or just join us and being part of diverse investment franchises, which is another, I believe, call to action is education. How do we recruit the next generation of investors, which I have a lot of thoughts on, but it's so important to remain disciplined and practice what you preach by executing your investment strategy in terms of what you share to your LP, to your limited partners, to Jeff and the Synchronies of the world. And so that's what we're doing at Zeal, remaining disciplined and consistent in what we shared.
Yeah, I mean, I definitely want, before we have this conversation, and to talk about this idea of recruiting the next generation of investors and what this means for future generations of entrepreneurs. You each use words that are almost two sides of the same coin: sustainability and legacy. In other words, no matter how successful something is in the moment, if you can't duplicate it, if it's not sustainable over time, then is it really a success? And legacy is our late founder Earl Graves used to tell us, wealth is not wealth unless it's multi-generational. And we know that this gap, this racial wealth gap that has now become front and center on the American consciousness over the last couple of years, is not a gap that's going to get closed in 12 years by Black Enterprise, Zeal, and Synchrony. We know that
Absolutely.
we're carrying a baton, we're advancing and looking to close this gap. So without building a model of sustainability that's going to lead to a legacy that can be built on, as you said, Nasir, long after we're not here, it
Absolutely.
doesn't work. And that's true to me with all business initiatives and maybe anything you would define as success. So I do really want you to kind of weigh in. Jeff, you talked a little bit about it. If you're putting your money, if you will, or Synchrony's money and resources, and that's not just the money, by the way. There's technical resources. There's the educational resources. There's the best practices that are shared in this ecosystem within the ecosystem. If you can't do that in such a way that delivers a real return on investment, there's a disincentive to continue down that path. It's a natural disincentive. At some point during the year, somebody's going to stand in front of somebody else and say, "This is what we did, and this is what we got out of it." And resources are allocated from year to year based on what you think the return is on. So if you could talk to me a little bit about this idea that to achieve sustainability, what Nasir and other investment company founders and managers like him are doing right now in this time has really broad implications for what we can expect going forward for entrepreneurs, underrepresented entrepreneurs of every background. Of course, Black Enterprise is focused on Black entrepreneurs, but there's a lot more to this than, oh, we gave X entity X amount of money to do something today.
Yeah. I mean, that is, you're really hitting on a crux of how we thought about this strategy, Alfred, right? Again, day one, it was finding great investors like Nasir who were investing in very early stage companies, right? That really, are investing in companies at the point in which the capital right now is the most challenging for them to find, right? And I think where the strategy continues for us and why partnership with Nasir and his team and the other funds is really critical is we see the opportunity for us to step in, in multiple ways with a lot of the portfolio companies that Nasir and the others are really bringing to bear, right? He hit on a point about really sticking to his investment strategy and being disciplined, right? That's critical for us as an LP because a big part of our strategy when we were thinking about, and as we were talking about earlier, how we chose the funds that we're actually going to look to partner with, a big part of that was, okay, where are you investing? What types of companies are you going to be really looking to, kind of bring, from their earliest stages to that next stage? Because for us, we want to be true partners, being able to not only, be there from a capital perspective, right? Day one by supporting Nasir and the other funds, but also day two when they are actually at that stage where they're going to go back out to the market looking for more capital, right? We are direct investors in that same way, and our mandate has, expanded effectively to also, to really think about ensuring that not only are we, kind of investing in great companies that are going to bring innovation to Synchrony and really help us better serve our consumers, but also and finding companies that are going to really impact the communities that Synchrony serves in, right? And that's a big part of our strategy. And so for Nasir to be out there, really bringing them from that initial stage to where it is now in our strike zone, which is a little bit later stage, for us to be able to write, bigger checks and, really being able to, again, continue to support his portfolio companies, that's a big, huge part of the strategy for us. And then I think the other thing I'd say is, as we talked about, capital not being the only part of our strategy. It very much so is, being able to then say, all right, success for us is being able to point towards the financial returns, of course, being able to say, and now look, we've invested in some of these other companies, like as they've matured, but also we've been able to bring to bear our subject matter expertise through from across the organization, whether it's on the credit side of the organization, whether it's on marketing, to really be able to say we are bringing the whole, kind of force of Synchrony to this initiative and seeing effectively the benefits that are really driving not only, kind of the portfolio companies that are today, but really building a systemic approach to ensuring that, we as an organization are out there supporting founders that are really doing things that are going to impact the communities that we are doing business in, and creating the opportunity for, you know, the future generations to continue to really be there, and be supported by the initiatives that we're doing. Because, you know, again, this for us, of course, the returns need to be there, but, you know, this is a huge initiative that really just speaks to the culture of the organization, and the goals that we have go well beyond the financial returns as well.
Nasir, I want you to build on this idea of. I'm going to get into the heads of the many people in the audience who are watching and listening to us during this conversation, and I want to talk to two groups: entrepreneurs who are capital hungry, who are saying, "Oh, listen, how do I position myself? I see these announcements of funds being available, whether that's venture funds, angel capital, et cetera, et cetera." We could stay in the venture space for the sake of this conversation. What should entrepreneurs who are listening here, at whatever stage they are, you know,
Sure.
to be thinking and doing to position themselves, if not tomorrow, at some point, to be able to take advantage of all this activity that's going on, that's being, you know, initiated by Synchrony and other corporations? You know, I always say that there's a window open right now, you know, and the degree that it stays open will be the degree to which we can actually show, again, an ROI, and I don't mean just a financial ROI. We're talking about the kind of ROI that changes the culture. So it's not a trend of 2020 to 2023, but it's a systemic change that redirects the algorithm, if you will, of the ecosystem. So I want you to talk about the entrepreneurs, and then, you know, and Jeff, jump in any time if you want to add or weigh in. The other group is the investors. You're talking about whether it's funds that could be created, or whether it's somebody listening right now that says, I'll never become an entrepreneur in the traditional sense of starting a black enterprise, but I could see myself, and I know some other, maybe I want to become Nasir. Maybe I want to, there's an area where I think fundings are needed, and there's opportunities for return on investment and to build wealth in the fund businesses. So again, those two groups, in the time that we have left, let's talk to the entrepreneurs in the audience. What advice would you give them? And what advice would you give to people who are interested in pursuing a career in, let's say, VC funding?
Yeah, that's such a great question. I'm glad you brought that up, Alfred. I think it is exciting to have the number of new Black-led venture capital firms out in the ecosystem, and it's even more exciting how proactive they are, given their mandate to invest in more Black entrepreneurs. I think it is so important also for entrepreneurs to do their homework. There's a lot of information out there, and instead of, whether you call it spraying and praying or you know, shooting a shot, quote unquote, you can easily go to an investment firm's website and look at their portfolio, filter what sectors they care about, or go to their mission or their investment strategy. I can't tell you the number of random random inquiries I get. Hey, I have this manufacturing company, or I have this agriculture company. If you take it a little step further, you will realize that that's not my work, and that's a conversation I care a lot about. As leaders, as entrepreneurs, as executives, understanding our work and our role in amplifying this conversation around access to capital and resources and mentorship is that we all have a role to play, and the truth is everyone can help. And so I encourage entrepreneurs to do your homework. Second, I'd say is that really understand your story. Like, storytelling is incredibly important. And so going back to, for us, we get, I would argue a lot of my peers, we get excited about clear founder market fit. That entrepreneur is the person to take this company to where it is today and scale it to the next stage of growth, right? And I also see, also maybe other strategic investors, because my capital alone will not get you to that next stage of growth. I have to be very thoughtful, right, in terms of thinking about other capital allocators who will find this entrepreneur, this project interesting, and possibly the next household $1 billion company. right? Like a Susu, one of our very, very first investments, Black-led company, got in at a $15 million post-money valuation, and 16 months later, executed it to over a $1 billion company. Great, great, great story, right? And so being able to execute the strategy, us having clear confidence in the entrepreneur. When it comes to really scaling the number of Black-led venture funds, it is again no cookie cutter approach in getting there. I truly believe you can be an amazing entrepreneur, sold your company, and choose to invest, and you can differentiate yourself in terms of knowing what it's like to build a company. And I think the only question is like, how do you build that investment acumen? And then you have those that may have traditional private equity, investment banking experience, and then you have others who may have other avenues. There's so many avenues in understanding how how to run a venture capital firm. I do believe, and I'll end here. Um, Representation matters. I remember when I was maybe 12 years old, my dad used to take me to Orlando, Florida, as part of the Kidpreneurs camp at Black Enterprise. Alfred, I know you remember this, and God rest his soul. Earl Grey used to come in and share his entrepreneur journey in building Black Enterprise, and that's actually when I got my interest in understanding what entrepreneurship more vaguely was all about, and learning how to build a business, learning how to market a product, learning how to build a team, and speak eloquently as you think about getting people excited about your project, and by it's serendipitous, but I definitely believe that urge continued throughout my career. While I just became an entrepreneur. Well, the coffee shop was probably one, but then as a fund manager. But that never left me. And couple that with mentors who were also entrepreneurs. And so representation matters. And I think, especially as we think about the next generation of investors, it's important that we have programs, right? So I'm the co-chair of Black VC here in the DC, the DMV, DC, Maryland, Virginia area, where we're encouraging and providing educational training for those who are like us, who are in the middle of their careers, but also who are early in their careers as well, even as early as current undergraduate students. And so it is, to whom much is given, much is required. It is so important that we lean in and also take leadership roles from my perspective to amplify the ecosystem, ensuring that we're training the next generation of investors. And I think I'd imagine, hopefully, God willing, that 10 plus years from now, that 1.3% in terms of who holds the investment capital will increase 10x, if not more.
Yeah, Nasir, when you told me you were a Kidpreneur alum in our conversations prepping for this conversation, and I told you you made my day. You almost certainly had at least one of my children as your classmates. But you're right. I talked to so many entrepreneurs today who came through that program, and even people who didn't go on to entrepreneurship, but their entrepreneurial thinking allowed them to advance in their careers in a really significant way. And they all, oh yeah, I was in the program. I was in that camp. I learned how to do a business plan, whatever. But
That's right.
so I'm always going to appreciate you saying that, and I'm glad that it's making such a difference in a very significant way. The other thing I really wanted to build on as we come down the home stretch of this conversation is this idea, and Jeff, definitely I want you to weigh in on it as well, that not only does representation matter, but this capacity to expand the DNA of knowledge of how the ecosystem actually works, so that you can navigate it, whether you're an entrepreneur, because an entrepreneur is really an investor too. He's investing in a business idea, or whether you're a traditional investor. I'm not trying to run or own. I'm just trying to put my money in a way where I can get the best return. Nasir, you said something about this idea that I build on a lot with my mentorship of entrepreneurs and others, of execution. That you might be attracted to the idea. Let's call it a business idea, but it's your faith in the ability of the founder to execute. Jeff, is your faith or Synchrony's faith in people like Nasir and the ability to execute. Not, yes, you got to be able to tell a great, incredible story, but then you got to look at that person, get to know that person, and say, yeah, I think they actually, that old saying, you don't bet the horse, you bet the jockey. And when I'm, talking to people, it's like, you can get, the fastest thoroughbred in the history of, breeding horses, but Shaquille O'Neal is not the right person to ride that horse. So it's not just the idea, it's the execution of that idea. And so much of that is about what Nasir said, Jeff, about being able to tell a credible story and then put forth, or inspire the confidence that you actually can bring that story to fruition. Talk to me about that in terms of not only who you look for or to invest in, but this broader understanding, that the better understanding we can create among underrepresented founders as part of the culture of just being in this environment, the better outcomes we'll have in the long run.
Yeah, Alfred, it's a really great point because, I think if you're thinking about whether it's our direct investment strategy where we're looking for, entrepreneurs and founders who are really have great ideas, right? But there is, that is kind of the preliminary hurdle for us to really start engaging with that company, right? You of course have to have a great idea, an idea that we believe that at our organization, we can work together to really help you bring that to scale and really bring that and make an impact in the industry. But the next thing that we look for is really, what is the culture of your team? How are you being built in a way, or how are you building out your team in a way that will allow you to not only be successful in, thinking about, where you're going to take the company, but how are you going to be successful working with, corporations like Synchrony or others to really be able to take that to the next level, right? And so we ask ourselves oftentimes, not that we necessarily need to think the same way as the entrepreneur, because if anything, that diversity of thought is really critical and important for us, right? But it's about how do you approach problems? How do you think about, really not only, the current the current thought that, or kind of current opportunity that's in front of you, but that longer term, capability that, that once we kind of get our hands together around this one opportunity, it creates so many more avenues for us, right? Because, oftentimes, for us, when we're investing there, we know that there is a partnership opportunity that sits either nearer term or longer term in a lot of those investments. And, initially those could be small investments and, you may not need to do all of the kind of, cultural assessment to really kind of take that from A to B. But, we're always thinking about there's going to be that next opportunity, that bigger opportunity. And so it's critically important for us to be engaging with, founders that we know are going to be able to, or that we believe, based on, all of the conversations that we're having and all the work we do in advance, that are going to be able to, manage through those challenging times, manage through kind of the pivots that are required as being an entrepreneur. And that goes the same with, how we thought about our investing strategy and the funds as well, right? It is very much so, an important partnership. And, I've said that word a lot, but it is really, that is truly how we think about this, right? In terms of being there to, not only, really be able to think about what the story is today, but seeing that execution really pan out over time. And, in the, I guess it's, what has it been, Nasir, about a year plus or so that we've kind of been really kind of going through this. And, in VC terms, that's still pretty young, right? But we already see that the execution that, that Nasir and his team have really been able to drive, that coincides with the strategy that we aligned to, or that he shared with us and we really grasped onto, are things that are really going to be able to pay dividends for him longer term as he builds out his ecosystem, and as for, as others who are, really thinking about, whether it's leveling up from, kind of their current investing strategy to then kind of approaching other, LPs to really kind of grow their fund size. It's being able to show those proof points of, this is what I said I was going to do. This is what the portfolio we've built based on that. And now, we're going to either expand because of, certain capabilities we have or new team members that we're bringing on, or really kind of, further that strategy. It's really going to be a lot, as we think about, continuing this strategy from an investing perspective, it's really going to be a lot about speaking back to those points and being able to show a lot of those proof points.
You said something as we wrap up the conversation. I generally try to end on a kind of a future focused note. You're in an environment, Synchrony and other companies, where you've made certain commitments, very public commitments, and as we move into 2023, 2024, again, 2 or 3 years removed, the marketplace, black consumers, black enterprise is now saying, okay, here's what they said was going to happen, and here's what's happening. And you said something, Jeff, that is core to the black enterprise culture. We have something called the say-to-do ratio. And it's the highest compliment you can get at black enterprise when somebody says, man, that woman has a really high say-to-do ratio, meaning, generally speaking, if they said it, it's basically done. And of course, nobody can do 100% everything that they say they're going to do. But it's a high level, it's a high measure of professional and personal integrity at black enterprise when anybody says, oh, you have a high say-to-do ratio. So given that measurement, this idea that, oh, they said this is the plan, and then this is what they actually executed on. What does a win look like? And I know that's kind of a complex question. Let's again, you can't really say what it's going to look like 10 years from now, 15 years, and 20 years from now. But you do have a goals and objectives that you're trying to achieve that you think is going to make a difference on all these different fronts that we've shared during this conversation. For each of you, if I came back to you and say, let's do a follow-up beyond our head conversation, now it's 2025. For the sake of argument, what would we be talking about at that point that would make you feel like, you know what, we were on a good path. This was a really great idea, and we really had a high say-to-do ratio, and we're delivering, and this is really exciting what we've been able to accomplish. What does that look like?
I'm happy to kick this off, Jeff. And first of all, Alfred, I love that. I may have to go back to my team and incorporate our say-to-do ratio and share it that it came from Black Enterprise, because it's holding us accountable, right? It is going back to this practicing what we preach to Jeff, right, and others, our other LPs. And when I think of, when I look forward to 2025, on the one hand, hopefully we would have had some distributions or some liquidity events by that time. Liquidity distribution events, essentially when companies get acquired or go public, and that's a powerful signal that you invested in a great company, especially early, to Jeff's point, given that we're investing so early. And it just sends a powerful signal that this is a by that time we're probably still a compared to other story franchises, one of the newer investment franchises on the block, but we've made some early noise to prove out that we're investing in household names across our three categories at that point, right? I think number two is that we've been able to do so, capture above market rate returns, alpha, by investing in at least north of 70% of BIPOC entrepreneurs, north of 50% in women, which is obviously well above the industry average. And so being able to focus on alpha, but at the same time focus on what we coin our inclusive investing strategy, which allows us to widen the lens, the sourcing capabilities, but keep alpha and impact front and center. Being able to prove that out, and that effect, and by way of the fact that it works, is important. So it's that's holding us accountable. And I think the good news is that internally we have metrics that we want to hit, and so far we're there. The last thing I'll add is that we only get one shot. That's one of the things that really keeps me up at night. When you're an entrepreneur or you're a fund manager, that's why I take every decision, whether it's a company, whether it's someone joining the team, whether it's an investor on a founder's cap table or an LP in Zeal, like making sure there's alignment, whether it's mission or strategic alignment, across those types of entities that are part of the Zeal community is so important. And so I keep often in the back of my mind that I only have one shot to get this thing right, and so that informs me and shapes me to make the best decision possible. Um, and so to that, I am very much just grateful for people like Jeff and Synchrony, investing in us so early.
Nasir, you made some excellent points. Jeff, if you could just kind of build on that as we give our final thoughts. What does a win look like as you go on this journey with Synchrony and these fund managers to really try to make a difference going forward?
Yeah, and I also agree. I mean, this is just a great way to end the conversation, and really appreciated the conversation today, Alfred. But as if we think longer term, what success looks like, from my perspective, in an ideal state, right, we wouldn't need initiatives like this, right? The 1.3% to Black founders, the number, the percentage that's going to women founders, of just diverse founders generally, right? That number becomes one where that represents, that is more representative to where we are as a society today, right? And we're don't want to end on too optimistic of a note, right? But and I know that will take time for sure, right? But as we think about this strategy for Synchrony, success to us continues to think about, or continues to look like us, not only investing in organizations like Nasir, not only supporting their portfolio companies as they continue to grow, right? But it is, really creating, I think, the successful proof points that make it so that there are, the traditional funds that are out there, more organizations like Synchrony that are actually, kind of the LPs supporting behind this, realize that there is just so much that can happen, right? When you put a true focus on, initiatives that are driving the outcomes that we believe we can, really drive together as part of this strategy. And so for us, I think, again, the opportunity to really take a step back and say, wow, Nasir, that first fund that we invested in together, not only did it have some great financial returns, of course, but look at, some of the, businesses that are now just really impacting, many communities that that we really care about, that have the opportunity to, be seen now as the future leaders in their industry, and in those consecutive funds, and that the opportunity for us to really just continue to work together over a meaningful period of time, and really being able to, I'd say, deliver on all of the goals that we've shared, throughout this conversation. I think for us, like that is really where we see this opportunity, and what would be the greatest of outcomes for us.
I'm struck by this idea that you said we don't want to be too optimistic, but you got to feel good that something's happened, that we're doing something. And I always we have, as Black people in particular, I'll speak for Black people, we have an impatience bias. Like whatever we want to happen seems like it's never going to happen. Mm-hmm. But when it happens way sooner than we thought it could happen. You know what I'm saying? So it's always like we don't want to be too optimistic, but at the same time we tend to make progress a lot faster in spurts, not in straight lines. It's always 3 steps forward, 5 steps back. Mm-hmm. But then we look up and I'm, having a conversation with Black men in the roles that you're in, and I guarantee you, there was a half a generation or 2 generations before that'd be like, it needs to happen. It may happen someday, but when is it going to happen? And so I always bring that understanding of what I call the impatience bias that says, yes, it feels like we shouldn't be too optimistic, but we're doing the work, and who knows when that fruit will be borne out. And again, the fact that I have a kidpreneur alum talking to me about, yes, we're going to create this next generation of market changers in the world, because as a 12-year-old, Earl Gray's told me I could be a businessman. That's, again, it just shows that we have a bias toward impatience, but that bias isn't necessarily borne out, and that's why we do what we do. We prepare for it to take longer than we want, but we're also doing the work we can do to bring it to fruition as quickly as possible. And so, listen, on that note, let me thank you, Jeff. Thank you, Nasir, for being our guest on Beyond the Hype. I mean, this is like a great conversation. I say this every show. I could keep this going. I just love listening to you guys. Jeff Lamour, Senior Vice President and Head of Synchrony Ventures, and Nasir Qadree, Founder and Managing Partner of Zeal Capital Partners. Thank you for joining me on Beyond the Hype.
Thank you, Alfred.
Thanks, Alfred. Great to see you.
Yep, you just heard another great edition of Beyond the Hype. This edition of Beyond the Hype was brought to you by Synchrony. I'm Alfred Edmond Jr., Senior VP, Executive Editor at Large at Black Enterprise, and I look forward to seeing you next time.